Hello guys, welcome all. I'm your host CPA Deko Mohammed. Today focus is on financial accounting. We want to focus on question 5 that was tested in August 2022. So I will also explain the other calculation bit. But today we want to do the theory, that's question 5, which was 20 marks. Question 5, part A was asking outline the information required by each of the following users of the accounting information. You have owners, customers, suppliers, lenders, and management. But B was asking discuss two benefits of using the double entry system of bookkeeping to an organization. And but C was asking explain three objectives of the International Public Sector Accounting Standards Board IS, IPSASB 6 marks. So let us begin with the first one. Uh, the users of the accounting informations. We start with the owners. Uh, Owners may require information of the accounting or the financial statement to know because they want to know the profitability of the business. When the business is making profit, because normally financial statement will communicate whether the business is making profit or not by checking the return or what you call the net profit, where if the business has a higher net profit, then the going concern might be long because you are making a profit. That is why the owners might require, or uh, that is the information they require as the users of the accounting informations, because owners, they are the users of the accounting information. So they require that information so that they can know where they are making profit or not. But P is the return on investment. Also, the owners want to see whether the amount they invested, because when you're starting a business, you contribute a capital, and when you contribute a capital, you require or you expect a return of investment. So the owners will require here a return on investment. That's why that's the information they require as the users of the accounting information. So for the owners, we have the profitability of the business and also the return on investment. Let's go to the next user, who is the customer. So the customers will require the information on accounting so that they know the continuity of the business, because customers will like to come back. They like uh, to buy the products maybe every month or every week. So they want to know if this business is a continuity, so that you don't just uh, waste your time in coming to that place. Because if they are losing their returns or their incomes, that is not a good going concern. And then customers also want to know if they have the ability to supply goods or services consistently, so that when you come, you get your goods consistently, not that you wait for them to be delivered in a week or 2 weeks. So they have that ability to supply goods and services consistently. Next is the suppliers. Suppliers want, as the users of the accounting information, suppliers want to know the liquidity of the business. How is this business going to run? Do they have the capital or the resources to run this business? So that if I bring my goods or if I bring my services, I can be, I can know that this business has a good liquidity that can pay you back your goods or services. The next is the ability to settle debts on time, so that as a supplier, you don't wait your money, because the value for money is very, very important. So you don't have to wait your money, so that you are paying on time. You agree, if it is 3 months, within 3 months you are paid. So suppliers, they need to know as the users of the accounting information is this organization has the ability to settle debts on time. Next is the lenders. Lenders are like the banks who normally lend money to these organizations. Lenders would like to know the ability of the business to repay loans. Do they have the ability to pay the loans they have taken from the bank or the other financial institutions? Because if they don't have the ability, from the word go, then I will not lend my money to them. Because through the financial statement, I can know if this business has the ability to repay the loans. Number two is the financial stability and risk positions. Whenever the banks want to lend you money, they do the risk analysis. Because even if you are to bring your things as a security, because the banks also don't want to risk their money. They might lend you money and then you go away with it. And you don't bring back the money they have lent to you. So they need to know the financial stability and the risk position. Next is the management. Management is the overall head of the organizations. They need to know, as the users of the accounting information, whether they need to plan, the basis for planning and decision making. They can make decisions based on the financial statement. After they have seen the financial statement, then the management now can make decisions. It will help them in making decisions. Number the next point under management is evaluating performance and control. Whenever the management see the financial statement, then they can evaluate the performance of the company, whether the company is making progress, achieving targets, or they are below the targets. They can measure the performance based on the accounting information. The next question was the benefit of the double entry system. The good thing with double entry system is that it ensures accuracy and completeness of the records. Because when you have a double entry system, because the rule, remember this is one of the rules for ledger, for every debit entry, there is an opposite credit entry. That is called the double entry. So it ensures that accuracy and the completeness of records, whereby the records are self-balancing themselves. The other point under double entry, the other benefit is that it facilitates preparation of the financial statement, because from the ledgers is where you begin your financial statement. From ledgers, you go to trial balance, and then from the trial balance, you can prepare your income statement and the balance sheet. The last question was the objective of the IPSASB, that is the International Public Sector Accounting Service Board. Now, they develop one of the objectives is to develop high quality and accounting standard for the public sector. It is this body that forms the standard. Now, standard that have quality, that means they are making, whenever that standard is applied in a real world, it is making sense and it is productive. So that's why they need to develop a high quality accounting standard for the public sector. Number two is to promote global convergence of public sector and accounting standards. Because across the world, the accounting standards are the same. Each country has their own standard, but now they are also the global standard that should be applicable to all the public sectors in the world. The last point is to improve accountability, transparency, and decision-making in public financial management so that everything is being transparent. It is seen, the quotations, the productivity, the suppliers, everything is being seen. So whenever you are reporting that in your financial reportings, then accountability, whereby you state how the funds have been accumulated or how have they been spent. That was the last question on question number 5. So in conclusion, different users, they require different financial statement, financial information. That is because we have explained how the owners, the suppliers, the customers, the lenders, how they require information on this financial information. So different users require a different financial information depending on the environment that he or she is. The entry system also ensures the reliable accounting records, and the IPSP enhances accountability public it enhances accountability in public sector reporting. So that was the brief class. I was your host. Next time we're going to do the calculations on financial accounting. You can let me know the areas of your concern so that I can also include them in my list. Thank you. I was your host, CPA Beko Mohammed.